As part of the mortgage application process, lenders are obliged to give you pre-approval, specifying the loan terms, including the maximum amount you can borrow. Getting pre-approved for a mortgage can help you buy a home more strategically by knowing how much exactly you can spend. However, the terms of any loan pre-approval are only valid for the predetermined time frame. After that period has passed, you will need to apply for a new mortgage pre-approval. So how long does a mortgage pre-approval last, and when is the best time to get pre-approved? In this video, we'll explain what mortgage pre-approval is, how it works, and how it can help you choose your new home.
By the way, if you like this type of content, be sure to hit the like and subscribe button.
What is mortgage pre-approval? Mortgage pre-approval lets you know how much you can borrow from a lender to buy a home. A pre-approval provides information on what loans you might be eligible for, including the amount of money you can borrow and the potential interest rate, based on your income, assets, and credit score. Before you start looking for a home, many real estate agents demand that you obtain pre-approval, to ensure they won't waste time showing you houses that are out of your budget, making the home hunting process much simpler. A pre-approval assures sellers that you can obtain financing for the amount they have offered. Keep in mind though, that a pre-approval just indicates that you are qualified to repay a mortgage. A real mortgage approval will only apply when you decide to proceed with the loan and purchase the property. Pre-approval versus pre-qualification. Pre-qualification and pre-approval are two different things, despite the fact that these terms are often used interchangeably. A mortgage pre-qualification is a rough estimate of how much the lender can finance you to spend on a home. Unlike a pre-approval, the lender does not check your credit history or validate your financial details, implying that the approved amount may change depending on the additional information provided. Mortgage pre-approvals, on the other hand, are more thorough than pre-qualification. A pre-approval requires you to submit documents that attest to your income, ensuring the lender that you can repay the loan. A hard credit check will also be necessary to evaluate your creditworthiness. How to get pre-approved. The pre-approval process is basically part of a mortgage application. While some lenders can pre-approve you in a matter of hours, others may require several days, depending on your financial situation. Generally, the lender needs to examine your finances first before getting a mortgage pre-approval. Personal information such as your social security number, proof of income, employment verification, and debt-to-income ratio or DTI will be required, so the lender can check your credit history and verify your financial information. After finishing your application, the lender will send you a document called a loan estimate, within approximately 3 working days. A loan estimate allows you to set a more realistic home purchase budget based on your financial standing. The loan estimate details the loanable amount, mortgage terms, interest rate, and other significant information. The document also specifies whether the mortgage has been pre-approved, denied, or pre-approved with conditions. If your mortgage is pre-approved with conditions, you might need to submit additional documents to satisfy the lender's requirements. On the other hand, if you are denied outright, the lender should explain why, and provide guidance on how to address the issues. How long is a mortgage pre-approval good for? If you are pre-approved, you will receive an approval document that is valid for 60 to 90 days, depending on the lender. It's a good idea to maintain track of the expiration date to avoid discovering that your pre-approval has expired after finding the dream home that you can afford. Nonetheless, you can still reapply once your pre-approval expires, which requires you to provide updated documents and request another credit check. Your pre-approval limit and loan terms may also be adjusted if there are any significant changes to your financial situation. When is the best time to get pre-approved? Getting pre-approved is best done as soon as you have decided to buy a new home. By doing so, you can determine if there are any problems that might prevent you from receiving financing. Also, knowing the mortgage amount you can secure helps you narrow down your home options. Remember that you are not required to stick with the lender who granted you pre-approval. As a home buyer, you can compare mortgage terms by submitting applications to several lenders, allowing you to select the option that best suits your financial standing.
We hope this animated video has helped improve your financial literacy. We do our best to provide actionable tips that are easy to digest and implement in real life. If you want to see more of these videos, please leave a like and subscribe to our channel. Also, comment what you've learned and comment what you want to learn about money in the future.
Thank you so much.
That's more than enough to help us grow and sustain our production expenses. See you in our next video.